Good evening, ladies and gentlemen. So far, we have gentlemen. Looks like a small crowd tonight. Understandable. It's Wednesday evening. It's approximately 8:30 p.m., September 13, 2017. This is Clueless Aid Trading Frank. This is a free market webinar update for all Clueless Aid members and free trial subscribers. We have a free trial subscriber here attending. Will, welcome. This session will be recorded and uploaded to the Clueless Aid Trading YouTube channel, which is an essential and critical component of my service, where I post strategic videocasts a few times a week. And I highly suggest that every one of you listen to my videocast prior to trading during the week. And I think it's going to help you guys a lot more than what's going on now. Okay. Full disclosure, this is purely for financial education and not for any solicitation or advice. So before I go any further, I want to make a couple of real important points like I normally do. All these sessions, all the advanced coaching sessions for private students, everything is geared towards one thing, helping you guys and trying to focus your energies and your discipline towards a direction where you guys can make money. It's simple as that. There are many members in our group who are not chat room attendees, who have busy, I mean really busy, high-powered, full-time careers, who are doing extremely well. And there are many in our group, including Say Trading, who are just doing crap. Many of you know me well. Will start to know me. I'm a very straightforward, direct, no fluff kind of guy. What I provide on Included Say Trading, aside from 100, 200, 300% type of profits, feel free to read the latest, one of the few that I post. Member feedback, which says it all. And he's talking about just 2 or 3 trades that he did. Not to mention the 10 to 15 trades that I've presented over the past week alone. And this gentleman has done an average of around 400%, 3 to 400% on my trade alerts. It is not the small losses that you take because of your emotional weakness and your lack of understanding of dynamic volatile markets. That's just the way markets are. It is your tactical discipline of trying to understand what I'm showing on my charts, and the mental discipline of sticking with the trade is what really matters. And what also matters is dropping a certain trade based on technical charts which are not going the way it should be going, or have worked but then doesn't work after 24 hours, such as Apple. Worked tremendously well prior, even right before the Apple event, but then started slipping and will most probably bounce pretty hard in the next week to 10 days. But regardless of that, that's just one example, aside from multiple other examples which went roaring ahead. Whether it be Alibaba, an average gain of about 260% over the past few days. Whether it be Tesla, whether it be AutoZone, whether it be Goldman Sachs, whether it be small cap plays such as Travel Center of USA, TA, such as UAL, just mentioned yesterday, such as a bunch of biotech stocks like Juno Therapeutics, Clovis, multiple examples. So the question remains that you guys need to ask yourself, and I'm not here to waste your time or mine, so I'm going to get straight to the point, is what is holding you back? What is holding you back is your head. Not mine, not the other guys, yours. So if you need to work on the mental discipline, I've always said that the only way that you can eliminate. It can never be eliminated. I take that back. Reduce to a large degree your emotional errors or the emotional quotient, which pushes you to do the most stupidest things at the wrong times. And I don't need to explain to many of you what that means. Okay? And the only way you can do that, the only way it's humanly possible for you to reduce and diminish your emotional errors because you think what the markets are going to do. None of us know what the markets are going to do. The only thing that guides us through volatile markets, you can see that directly in front of you. Going back to, I'm just giving you a small example here because this is a very pattern symmetry chart. Going back to the 8th of August, for example, when we had the last previous high, which we broke out of today on the actually broke out. Yeah, we broke out today. We broke out actually after hours. The only way you can diminish that emotional component, which has been your biggest enemy forever, and believe me, I know these things, okay, is by trying to become as robotic as possible by understanding, not just looking, but understanding the messaging that's coming out of one of my charts. For example, this is the market. These are the E-mini futures. This is the backstage of the kabuki theater that we call the stock market. What is happening behind the scenes so you can manage your trades better on the front side. If you do not try to take that extra discipline and the step of understanding these beautiful charts that I produce, which are throwing off a lot of messages. And this is not a kid's game, guys. You want to make some real money. You can make 7 figures in this business with a limited amount of capital. No business allows you to do that. No inventory, just your brain and your capacity to control fear, unfounded fear. So my bottom line is that the only way you can diminish that stupid emotional component that screws you guys up and screws me up too at times, but I'm far more robotic than anyone that you know out there. And people who know me on this service know that very well. I stay calm. I don't just do BTFD, buy the F dip. I look at tactical levels, which are buying opportunities, where the patterns are allowing me, where the indicators are telling me. And guess what? I'm more right than wrong. It is not the one loss that you take. It's the 3 times more that you can make up in other multiple trades or other trades that you're doing is what matters. So the only way you'll survive in this business, and somebody here said they want to be consistent. Well, heck yeah, you want to be consistent. But the only way you can be consistent is if you really take the time and energy to understand how to trade volatility. Because if you don't know how to trade these volatility-driven markets, and if you don't think these markets are volatile, you're living in some part of the world I don't even know. Okay? So everyone's got a bag full of excuses. Everybody. Okay? I gave up a long time ago making excuses. In life, in your own lives, stop making excuses. In trading, don't make excuses. Okay? Don't make any excuses. Because one of my favorite quotes, let your dreams be bigger than your excuses. But what happens with 90% of retail traders, who honestly I don't think are really strong-minded people, they just want to basically get a free ride. And a lot of people can get free rides, to be honest with you. I'm doing the hard work and I'm putting the trade alerts out there. You just got to go ahead and take them. If it doesn't work, get the heck out, get into another one. But if you give a bag full of excuses to yourself every single moment of the day, I have this, I'm too busy, blah, blah, blah. Guys, I have traders who have 7-figure jobs or 7-figure businesses who don't give themselves excuses and kick butt on my service. And they have a heck of a lot more responsibility than a lot of you put together. Trust me when I tell you that. All right? So Stop giving yourself excuses. Try to be as robotic as possible. I am always helping. I'm engaging with my members, and you'll find that out. Okay? And Scotty, stop kidding around Roboto, okay? Please. Because you're another example of a guy that I love. I think you're a great guy, great family, great person who has not taken the time and energy to understand the complexities of the market and make some real money. You are a lot smarter, Scott, than a lot of people I know. Believe me when I tell you that. I say that as a compliment. But when it comes to this side of the business, you get some hits, but you are far from, and after all this time, you're far from really capable of handling a lot of things. Yes, I am Mr. Roboto. And Scotty, you know me. No fluff, man. I'm not here to harm anybody, insult anyone, anything. But you know what? As a coach, as a mentor in trading, I can't be encouraging bad habits by being a softie. Okay, I don't think that's how great coaches are made. And I don't want to be a great coach. I just want to be a great trader. The service is just a secondary component of my real life. My real life is my own family trading book. That's what I rely on to pay my bills and to support my family and to donate heavily to my biggest causes. So my point is that you guys need to change. And the only way you can be consistent, the only way you can manage and you don't need to have every trade right. If you do 10 trades, let's say over a month, you just need to get 7 right. Out of that 7, 2 will be blockbusters, 3 will be very good, 2 will be like, kinda, and 3 will be losses. And you will come out well ahead of the game. That's just the nature of the beast. It's not just in trading. Apply the successes you have had in your own lives into and translate them into successes in trading. Trading is difficult business, guys. All right? But boy, do I make it easy. If and only take the time and the energy to understand all the complexities of these charts where every single trend line means something in your pocket. That's it. No more needs to be said. Stop working on yourself and stop giving yourself excuses. We can all give ourselves a ton of excuses and hide under the bed and let the market just float by us. Let the trades just float by us and say, well, maybe next time. The worst 3 words, maybe next time, that you can ever tell yourself. On that note, let's start. Real simple here. We have I'm going to give you some real simple dynamics. There's a lot of stuff going on in this chart. Very simple. First of all, trend lines. Support range. Ranges. So these are just every single one of them is as a point where the market's either sold off, known as a supply zone, big supply zone, for different reasons. Could be a Trump investigation, could be Trump Jr. News, which was actually an amazing buying opportunity, could be some bad news coming out of China, and of course, the repeated missile launches by the fat man in North Korea, right? So all kinds of stuff. But the markets know only one thing, where they want to go. Not where they're coming from, where they want to go. So regardless of all these terrible news and tragedies happening around the world, we just had a terrible tragedy in Houston and in Florida with the hurricanes. But the markets look at the consequences of that and how it's going to affect corporate earnings, how it's going to affect the U.S. economy. And when those are diminished because of for lack of a major severe hit, for example, if Miami got hit in a big way, I'm sure the markets would be down the following day a bit before it recovered. But it didn't. The nerve centers of Florida didn't get hit that bad. Things that matter. Markets are selfish beasts. They care about money. So if you want socialism and all kinds of altruistic benevolence, well, don't trade. Wall Street's about money. U.S. business is about money. World runs on money. Face it. So the bottom line is, Look at the structure. All these different things, these are the supply zones where the market sold off, right? And I've earmarked each one of them. In fact, on my charts on the Twitter feed, I put more arrows and roadmaps which just walk people through. And no wonder there's a whole bunch of members who are just kicking butt. And there's a whole bunch of members who are holding a bag full of excuses. So decide which way you want to be, guys, all right? Seriously. So you got these supply zones here, where the sell zones are, the mini sell zones, big ones. And then you got these big demand points shown through multiple patterns. This is a nice little inverted, a hammer reversal, big short covering, candle expansions, all kinds of stuff going on. And the patterns, to me, are clear as day. The pattern to me is clear as day what's going on here, where the markets want to go. They just want to go a little bit more higher before they correct again. That's just the way things work. This is not here and a straight line to where we are right now. Sorry. I don't know how many times I've said this. Straight line to here? No. No. It doesn't work like that. This is what real markets do. Like I said, real traders manage volatility. Fake traders want perfect situations of a straight line up, straight line down, because they live in some paper trading world or whatever world that they live in, because they think everything should be a straight line up or a straight line down. And they refuse, they're so stubborn, they refuse to accept the reality of volatility. And if you don't think this is volatility, and we make a ton of money off this volatility, guys, at least the tactical traders do. The emotional ones want this. Well, life ain't like that, guys. All right? They want this if they're short. Well, life ain't like that. This is what happens. Is that a straight line down? You tell me. Now, I predicted the markets would hit 2,500 months ago, actually. In fact, I predicted 2,550. It's on my charts, it's my video cast. I leave it to your own time and energy to go listen to them. And that's probably where the markets are going to land up sometime by late October, to be honest with you. And there's a whole cluster, well, that's a technical thing, whole cluster of large calls that have been bought and left in there by the so-called smart money or so at the 2550 level. Funny, huh? Just the way it goes. SPX 2550. Remember, these are the futures. So when you're looking at these numbers, you just have to add roughly 5 or 6 points in order to convert them into SPX. So 2505 is roughly around 2510 SPX. So coming back to volatility, each of these moves have a certain pattern to it. This very large pattern, this, for example, is a inverse head and shoulder. You got a head, you got a left shoulder, you got a right shoulder, and this is what it looks like in textbook fashion. It tried to break out. It hit that supply zone. I think it was a North Korean missile thing, the first one, when they shot one missile over northern Japan. We were short. We had VIX calls, which went up 400% on that. Call it lucky? Sure. Why not? It's called preparation, gentlemen. Remember, always have some VIX calls put away just in case. They're cheap, but when they move, they don't move 2%, 5%. They move 100%, 200% on some sort of sharp decline. Anyway, a big waterfall decline, heavy volatility, a double bottom, a reversal candle, a reversal hammer, which looks like a Chinese firecracker. And I have a whole video on candlestick patterns on my YouTube channel. Feel free to listen to it. I didn't make it. I found it. I thought it was brilliant. It's a robotic voice explaining to you what candles are all about. Very easy to understand. But as you practice more, you obviously see these real things in motion. Anyway, then we go into a trading band, make another double bottom, and a nice fat double bottom was created. Buy time. Because 2400 or 2420 on the E-minis is an extremely powerful support. Walk people through it inside out. Then came the surge. Big. This is what you call a surge. And this surge culminated into a move back up to almost, not quite, to the previous highs, which should have been here at the 2488 level on the E-minis, which is roughly around 2490 something on the SPX. Then we had this one was the so-called nuclear test. They did underground nuclear bomb that they blasted, the North Koreans. We fall. Market starts to rise a little bit. I said it's a bear flag. If you don't know what a bear flag is, like I said, study my video, which I did on my YouTube channel under new member introductory videos, basic chart pattern analysis. I kind of looked at this. I look at 32 different indicators during the day. That's my job. I do my job very well. Question is, are you guys doing yours? Well, many of you are not. So, and many of you are. So I looked at that and I made a determination, and that is purely my job to make that determination, that this looked like a bear flag, which means it would break down. Well, guess what, gentlemen? It broke down. Again, we were long VIX calls as protection. And I wasn't telling people to shove in and buy big time long positions when I thought it was a bear flag, because I wanted to warn people. Take it easy. This looks like a bear flag. This is what a bear flag looks like. Just like that. It went straight down. Hit the previous support right there, and then started going up. Didn't go up in a straight line. It went up, created another double bottom, in which case it has now become, like I said, I had mentioned multiple times, and go through my Twitter feed and match the dates. This was back around, which was back last week, that last Friday, that this was going to be, this was last Friday, by the way, that this looks like it was going to be a W pattern, which is known as a dragon bullish. This was the pre-Irma financial insurance panic. Markets went down hard. If you remember, we were selling like a nut on Friday, just like that. You know, it felt like the world was going to fall apart, but it really wasn't. It was just institutional selling, and I showed that repeatedly. Didn't feel good, but a great time to buy based on the fact that Hurricane Irma would demolish the insurance companies, and that would cause a $250 billion loss, which would cause the banks, such as the big investment money center banks too, to collapse. Well, collapse short term and take big losses, which means they would take a big earnings hit. Well, guess what happened? Which I also explained. Irma really didn't happen. It happened. There were some, that's the tragedy, but it didn't hit the nerve center, the financial centers, which really matter. Guess what happened? We gapped open and we went up, and this is called a gap and a go, the impulse move, and this is where we are right now. And if you go through my Twitter feed, you will know exactly what I am saying. It's a running board of what I think the markets are going and what they're going to do. This chart, for example, which I repeatedly have updated, and you'll find out that this is probably the only service that's out there that gives you real-time precision charts for you to walk through and act on a real-time basis. Not just a trade alert. 90% or 99% of my trade alerts come with an actionable chart for you to work on. So here's the Twitter feed. And I walk people through this chart all the way from, bear with me. That's a beauty. Okay. All the way from, even from the point that we started the day after Irma. And each one of these channels are very, very clear. Your consolidation channels where profit taking comes in, the turnaround that happened this morning, And this is where we ended up at the end of the day. Beauty, huh? Even if you knew nothing about technical analysis, which most people don't, you can pretty much clearly see that that big fat green candle is $500 million worth. Okay, and this is multi-billion dollars worth of money going into the market. Like they say, follow the money, not your head. Your head knows nothing. Your emotions are profit killers, not just yours, mine too. Because human beings, believe it or not, ask some big shot psychologists, their brains are geared to lose. Do you know that? So you have to fight and use tools to turn your brain around in order to be successful and win. You don't believe me? Just Google it. Your brains are geared to lose. It's always about fear. And that's what causes losses. Now, what are retail traders doing? So anyway, so this chart is picture perfect. Picture perfect. No question about it. And at this point, from a forecasting standpoint, it looks very likely. And I repeat again, the game of trading and investing, both, is a game of probabilities. Is it a higher probability you're going to make money on that trade based on the tactical patterns and stuff that I'm showing, or is it a lower probability? That's what we play on. We don't play on certainties because there are no certainties. The only certainty is, to be honest with you, that we're all going to die one day. And the only certainty in my beliefs, there's a God, right? But there are no other certainties. You know, there's no certainty you're going to wake up tomorrow morning either. So bottom line is we play the game of probabilities. It's a game of playing the odds, right? So the odds are much better when you see it in a very tactical, robotic way, as my good friend Scotty likes to call me, Mr. Roboto, okay, is the fact that if you're robotic, then you are eliminating a good deal of the garbage, emotional fluff that is the ultimate profit killer, period. So saying all that, this pattern is pretty much like a W, which looks like it's going to resolve somewhere up here. And my other charts are showing how far it can go. In fact, you can extend this, you can extend a line like this and you arrive at around 24.97, add roughly 5 to it. You're looking at around 25.05 or so, which is only, we closed at 24.98. So you're looking at another 7 S&P points multiplied. One S&P point is roughly 6 Dow points. So you're talking another 40 or so Dow points before the market hits a roadblock. You don't think we can get 40 Dow points? Come on. So pattern completion could be up here. Or it could be another mini overshoot. Because believe me, there's a lot of shorts out there. And a lot of people are either short or just SOA. That means sitting on your, you know what, on your behind. Okay? So tons of money. The $6 trillion that are sitting in money market accounts, I don't think they're floating back in the market. $30 billion went out of the stock market because everybody's a frigging chicken. That's fine. It's great for us. The more scared people are, the more money we make. So $6 trillion is sitting in money markets. Go, whoopee. What do you think that's going to land up? None of that $6 trillion ever is going to land up in the stock market because everybody's just so dead scared. The stock market could be at 30,000. And this $6 trillion probably only 2 trillion would enter into the market. That would push the market up another 1,000 points. Okay? So the fact is that when people say, oh, you know, the market's overvalued, yeah, right, as if you guys know valuation. There's different ways to look at it. The markets, from a sentiment standpoint, the easiest way to figure out, okay, is very overvalued when I see a majority, and I'm taking a small sampling, statistical sample, majority of my great members and traders all making money. That's when the market's overvalued. How about that? The fact that a slim majority are being consistent and hitting those type of numbers shows that there is no euphoria. And that's fantastic. We have low attendance in the participation in the chat room. I find it to be fantastic because I reminded somebody today. Trading is a solo sport. It's a game that you play to enrich yourself, your family, and do all the right things in life that you want to do. So don't worry about other people. Don't worry about what they're doing because they ain't paying your bills. All these chatterbox chat rooms, where there everyone's like, oh yeah, I'm doing this. Honestly, garbage. My main conduit, where you need to be focusing on, is the chat room's fantastic to ask me questions, me putting in comments, some banter about certain things. That's fine. Some kidding around. But the serious business is on the real-time Twitter feed. Focus on it like a hawk. Sign up for the advanced coaching sessions. Talk to the people who have taken it. See what difference it's made to their pockets. Listen to these free webinars. Understand the messaging coming out of the real-time alerts, the charts, the comments. Understand 50% of it. How about that? I would guarantee you guys don't even understand, majority of you don't even understand 10% of what my charts are trying to show. And it's a fact. At least I have some great members who are honest about it. They're like, no, I don't even look at your charts. I'm making money. Sometimes I'm losing. Yeah, it's all fine and good when you have a nice little run up like that. But when volatility hits, they're lost. They're lost. They don't know how to manage their trades. That's the difference between a real trader and a wannabe trader who makes a lot of excuses and then hangs his head and says, nah, this guy's garbage. I don't get it, but move on. Fine. It's fine with me. Honestly speaking, I don't care. And why should I? Because I do my job trying to help people and show the roadmaps on what they're doing. And as long as I keep on doing my conscience is clear. Okay. Then so there's one chart here, and this is a bull flag, like I mentioned, and this bull flag looks like it's going to resolve itself somewhere in this zone. That's what my gut feeling is based on what this is showing. Is it possible, and these are all the different probabilities, that the market all of a sudden takes a dip and touches this uptrend line? Remember, this uptrend line is from a major support level down here. Now remember, I'm discussing these charts, and somebody new like Will is saying, why is he talking about the minis? Well, I'm talking about the minis because this is where the real action happens that dominates how your trades in the front side are going to do. Tesla, which has been a consistently huge winner for us, just giving one example, mostly long and sometimes even short, is do you think it's going to survive if and not go down 6-7 points if the market drops from here to here, which would be a drop of well, not much actually. The 24.95 to 24.88 is really only about 30 points. Well, Tesla will be down 4 if that happens. Is it the end of the world? No. Market could certainly do this and then move. Wouldn't be surprised one bit. If it breaks this, I'm going to start shorting. Because at that point, another pattern comes into play right there. Then it would be something like this, which would be a strong buying opportunities. A retest of this downtrend line, a retest of this very strong support right there. You can see that. Multiple points of contact, right? Right there. And probably sets up for another move higher. Volatility is not meant to keep you happy and give you a warm, fuzzy feeling, guys, okay? Volatility algos, algorithmic high-frequency trading black boxes, that's what they really are, super fast computers, which are actively day trading the markets, a lot of them. Actively day trading the markets, up and down. No wonder prices move up like boom, boom, like all over the place, right? Especially if you're in high momentum stocks. So they're meant to get you out of the trade before they decide to go wherever they're going. And you guys know that better than anybody else in the world. What I do is I will show the roadmap and help people stick with that swing trade, like that member feedback. And there are tons of them. Please read them on the testimonials. Okay? Who swing it? Who swing a URI for 400 or 500%? Who will swing a US Steel for 200% plus? Who will swing Alibaba for 260% plus? Because they're following the charts, they see no breakdown, They're seeing what I'm putting out, they're reading my comments, and they're sticking with it. Unlike many of you who are MOHTR, which is known as in the business monkey on a hot tin roof. A monkey on a hot tin roof likes to jump around like nuts and watches the price. And every time the price dips a little bit, they're out of the trade without realizing the pattern has not been broken. I can only help if you guys have to help yourself. So anyway, you know what I'm talking about. So at this point, uptrend is very much intact, and unless we break the uptrend line, we're still good to go. And that uptrend line is somewhere around the 2485, 2680 level. Now you guys have platforms that you can see all this stuff, and you better have a platform. This is a free one, investing.com. Brilliant, brilliant. I can trade off this alone all day long. The candles can be seen beautifully. I structure the charts so I know what the levels are, where I'm buying or selling. But you need to have a platform which mimics one of my two major ones that I use is Thinkorswim and investing.com, where I construct my charts, as you guys all know. And the third one is a very advanced platform known as Quad, which I call the Algo HFT. Leave it for another day. Some of my more advanced traders use it consistently. They do extremely well. They read the signals like a wizard based on the stuff that I'm putting out. But that's for a little bit more advanced people, technical guys. Anyway, so let's look at another one. Here was another one. And if you see this, you can clearly see nothing happened. As long as this big fat red line, the red zone, did not get violated, we're good to go. And that's exactly what's going on. We're in a range. I'm going to compress a little bit and see what that range could be. Well, the range basically adds up to 2,500 on the E-minis. That means approximately 2,505 to 2,510 on the S&P 500. Everything here is fine, and I'm showing the easiest indicator you can follow, which is the stochastics. And I don't even tweak around the numbers. I just put the default. You guys just have to use your eyes and let your eyes talk to your brain and hopefully do the right thing. Let's take a look at another. Alibaba. Okay, forget about buying here. Forget about buying here. What about buying here? Yesterday. Because I've been pushing Alibaba all the way from down here. In fact, since much lower. But let's talk about recent stuff. It's a completely robotic stock. I can't draw these perfect lines unless the machines allowed these candles to be so mechanical. So I'm no magician. I'm just joining the dots and showing a pattern. This is a rising wedge. It was pretty goddamn obvious. As probability goes, almost 80% probability that this baby was going to basically move. Now, even if you bought it here, you're still up $2. Your options would be up 70% plus or more. And at this point, it's getting to the upper end of the rising wedge, which is around the 180 plus level. And look how mechanical this is. Is it really that hard, guys? Come on. And I asked people, this is right before Irma. I can understand the anxiety before Hurricane Irma, and the hit, just in case it hit full blast. Then obviously the banks would get hit again. Insurance companies were cratering. That's where the pullback came. It was a mild pullback, to be honest with you. We're buyers. Because honestly speaking, it'll bounce anyway. What did Alibaba have to do with the insurance losses? Even though insurance companies own a significant amount of stocks, right, in their other portfolios. So they would have to sell a chunk of them. That's the reason why they were raising cash right before Hurricane Irma. So they were selling their high beta, high price stocks, the $100, $160, $200 type of stocks, $300, $400, $500 type of stocks, in order to raise some cash just in case they needed to basically, deal with heavy losses on their books because of Hurricane Irma. Well, it didn't happen. It's a gap up and go. So Alibaba itself had strong support level at 167. That's this red line. And very strong support level at 163, just in case things went the other way. would be buyers hands down. But no, it just gapped up and go. Yet, if I ask most people, not most, some people, they'll be like, no, I didn't get in it. Well, what can I say? I'm not going to exhaust my time and energy telling you that I don't even know what to say. All right. I care. That's why it just bothers me when people are just so blatantly stupid so long, so many times, and so much money can be made. And again, that old excuse, oh, I don't have that much capital, is garbage. You can do this with small capital. It does not take much to buy an option at $1.50 that goes to $4. So that's another lame excuse I hear, this and that. Anyway, so at this point, that's that's what happened and still happening. Let's take a look at this. This is the S&P futures 15-minute chart that I showed today. Anybody with half a brain would know exactly what it is. When I draw a box like that, that means it's a range. Not that hard. Even a child can understand this. Okay? And once it enters the upper end of this channel, I call it the bear kill zone. That basically means where the short squeezers really, the dogmatic bears, really get slaughtered. Okay? In other words, you get a sharp impulse move all the way up to that 2508 level. Real fast. No time. Just got to get in. Because at that point, the short squeeze machines, billions of dollars, which are shorted against the S&P 500 and the market, get squeezed, decimated. So they're forced to buy. That's what the meaning of a short squeeze is, just in case somebody doesn't know. So I call it the bear kill zone. Are we going to get into bear kill zone? We'll see. But this looks okay for me so far. And even if we don't get there, even if we get from here to here, we're long here, and we've been taking staggered profits, of course. I mean, that's a given. But even from here, from the 2492 level, if we hit 2500, you got 8 points that you took. That should be a double or so, maybe a little bit less on the SPX calls or the SPY calls. Forget about getting in the bear kill zone. So very easy to understand, very easy to see. What's this one? NVIDIA, a favorite of many traders. This chart is designed for perfection. Here's your big fat channel. Here's NVIDIA. Here is where it is. There was a little slight drop at the end of the day. Whoopee. What does that mean? End of the world? Just primarily because it hit another supply zone or resistance close to it right there. You can see that, which was back from the 1st of September. So at this point, is it going to come crashing down? I don't know. But from what it looks like, with the strength in the market overall, you have to look at that picture. And of course, I'll be walking people through it. As long as the stock holds 169.82 or thereabouts, okay, around this zone. As long as this holds this zone, the stock's going to bounce. And where is it going to bounce to? It's going to basically bounce back to its previous high, right there. And we have been playing NVIDIA from $95 onwards, if anyone cares to remember. I came in a little bit later, actually, because I wasn't playing the initial surge. Man, I said, man, I can chart the stock like a king. But it's not a one-way ride. It's one heck of a volatile stock. But I can see the patterns. So you can use NVIDIA for short-term trading. Trade it during the day. When I loaded it today, it went up about 30% in about 20 minutes. So buy a bunch of calls at $1, sell it at $1.30. Unless, like I heard from somebody who was a free trial, he goes, your service is fantastic. Listen to this, guys. This is real, okay? And I told the guy, man, you really are humoring me so much. This is classic. I'm going to put this up on my screen. He said, your returns are fantastic, but I'm not concerned about returns. I said, oh okay. He's not concerned about returns? I said, I wish my old ex-Wall Street clients told me the same thing. Frank, I really like you. I'm really not concerned about the returns. Like, what are you talking about? The only thing you should be concerned about if my trade alerts are performing. and the returns are in excess of are in the range of that 50, 60, 100, 150% on individual options trades. That's the only thing you should goddamn be concerned with. And he goes, I'm not really concerned with it. I said, great, nice talking to you. Anyway, so in the meantime, he's praising me. Your process is great and this. I said, listen, thanks a lot, man. That's another thing, Will, you learn about me. All right? And is I don't need praise. I don't need compliments. I know what I am. I challenge myself like a kid with, that song, like $20 in my pocket, right? Or a song from the old days. So I treat myself like I had $20 in my pocket and I need to make money. So if you don't have the hunger, do not be a trader. Do not be anywhere close to the financial markets. Hunger to succeed, to make money. That's what you're here to do. You're not here to paint pictures. All right? If you don't have the hunger, don't bother. Don't bother wasting your time and mine. So upper end of the channel, 178. We get there, we shall see. Market cracks a little bit, it's easily going to come down and test the 166 level. Is that the end of the world? Because that's a major support level right there. That's a major support level. My other charts have shown that clearly. And I'm going to add that line right directly in front of you guys. Right there. Bingo. That line should be red. Bingo. People who know how to read my charts, who have learned and spend the time learning, know very well what each of these lines mean. And they can trade off them. So even if NVIDIA does this is where it closed, does this, they're going to be buyers. And of course, my alerts are going to come through. But they'll become more committed buyers because I'm alerting and they're seeing this directly in front of them on my charts. So their eyes are talking to their brain and their brain is telling them to act. Problem with a lot of emotional retail traders are they're not bothering to really understand the charts. So their brain is looking at something. It's not their eyes are looking at something, but it's certainly not talking to their brain. So they're not acting on it. Good luck to them. Keep doing that, man. You'll be fried chicken, burnt chicken. And some traders become like that. They become burnt and just, angry. I like angry. I get angry at myself. Believe me, I do. Because I'm not running at 100% peak performance. I've said that many times. I'm running at maybe 60, maybe 50. I want to get to 80% peak performance based on my own work. And then that'll be the day, God willing, that I'll say, I've done something really right. I'm not there yet. And some of you guys are way out of the highway. Maybe running at 5% peak performance, despite all the tools that are given and the alerts that are given in front of you. Seriously. So get angry at yourself. Stop blaming the world. Okay, let's move on. Here's another beautiful chart of Tesla. This thing should be, like I said, in MoMA, Museum of Modern Art, right there in New York City. Because we have traded Tesla using this one chart that I drew all the way down from the climactic bottom of 300. And this is recent climactic bottom, not like I'm talking like the 180, which is shown on my other charts, which was a few months ago, right? Last year, 180 when it went to 143 actually went to. But this double barrel bullish engulfing reversal, oh, no, so that's it. That's the end of Tesla. This was that huge drop. Remember, we played the move to 392, and that's where it's going to go to. Just letting you guys know, Tesla's going to retest that. But when I ask people, are you guys in Tesla and stuff? Most of them like, no. Oh, okay, that's great. Seriously, it's pretty laughable. So saying all that, this chart can be used by anybody. Anybody. In fact, a child can use this chart and tell you. You have children. My son's grown now. He's going to be 19 in November, sophomore year. No longer a kid. But if he was 6 years old, 5 years old, I show him this and say, where do you think this is going to go? The kid would basically take this and he would go, Daddy, it probably goes like this, kid's drawing, and then it looks like it wants to go here. Well, goddamn, that's exactly where it's gonna go. On the way, can it do some funky stuff like come back and retest 352? Absolutely. If it breaks this uptrend line, which also happens to be the confluence of the downtrend line, then we're talking a move down towards this major support, which we played off, which was a 1, 2, 3, 4, almost a quadruple support. Big buying, big buying. So of course we're looking at the probabilities. The probability is, given all the world global catalysts, China looking to ban sales of gasoline-powered cars, which I mentioned, which I put out the article, in the next 10, 20 years. Wow. Who do you think is going to be the winners in this race? So bottom line is, Will's writing, I'm starving. Well, we'll see how much you starve, man. Okay? Sign up tonight, and we'll teach you. And we'll see how hungry you are to learn and to make money. So Will goes writes, I'm starving. Because talk is cheap. And my good friend Scotty, who's like my brother, knows that. Talk is cheap. I mean, he knows what I say, and I mean it. So I've heard enough traders say a lot of things. But the ones who do extremely well, it might take a little time. That's okay. We'll see how hungry you are, Will. All right. So bottom line is, that's what it is. So this chart, if you look at it, every single level, I want to pinpoint this because this is important, very important. So I put a little notations, bull flag. Okay, let's say you don't want to deal with the bull flag. Okay, it's a bull flag, big deal. But bottom line is, look at each one of these arrows that I put. I'm putting arrows where the stock might come down to. In fact, this arrow was actually up here. It kind of moved on the screen. Arrow right off the gap open, buy. What does a retail trader do? The emotional freaks. Oh, I missed it. It's at 344. It gapped up to 351. That's $7 higher. I missed it. Gotta get over that mentality. Markets are numbers. These machines have no memory from day to day. These hedge funds want to buy the crap out of Tesla now. So that's why you had that big fat green candle with the continuation pattern. So you didn't miss nothing, anything. What you missed was the fact that you never got in. And those calls went up a gazillion percentage. That's what you missed. And here is some volatility right at this level here where there's big resistance. We didn't get there yet, 371, which is a major point of supply, meaning that sell points. When Tesla crashed, this was the first level it really started going down, and this was all the way back in July. So that's the same level here in that 371, 372 range. So you could play it for a few more points. It's almost there. It's 366. I mean, I have Tesla October 20s. So I'm like, enough time. But I'm also playing the short-term ones, which I'm telling people to, I'm alerting people, September 15, September 22. Very profitable trades. But most importantly, you have a roadmap in front of you, ladies and gentlemen. So you have no excuses, none. You look at my alerts, you look at the roadmaps, you look at these channels, and you say, okay, does it look like it's about to crash and burn? And if the first little voice in your head says, nope, it doesn't look, it looks like it's going to go higher, act on it. Because the first thing that your brain says before your other part of the brain comes in and says, nah, don't put money in, wait for a better time, wait for 30 cents lower, all that garbage that comes in. But the first look says, yes, get in, get a starter position. Don't have to go in, put all your money in there. But this pattern is a powerful pattern. It is a multiple W formation, which resolves itself initially at around the 372 zone. And after that, we'll see. Probably it pulls back a little bit, back to this upper gap. Remember, there was a gap here. That's the reason why this extended green box So there's your gap, 364, 363. So it might very well move 372 and then move down like this. People say, oh my God, it's down from 372 to 364. It's down $8. Holy cow. Nothing. Just standard patterns. And then make a surge higher. But it's very, very clear on the charts what the buy and the sell zones are. And how, and you manage your own trade. If you bought a chunk of it, for example, then you have some nice profits. Get the heck out of Dodge. You don't have to hang around. And then revisit it. Or you have a small amount that you put in there, then you sit patiently. If you bought the October 20s, like I said, the 400s, just sit on it. Even the October 400s, guys, are like $4. So there's a lot of premium built in there. Why? If none of these the so-called machines and the smart money market makers knew that Tesla was never going to go to 400, why would they price an option call at 4? They could have priced it at 40 cents. Because they know they wouldn't have to pay you because it's not going to go there. But it's priced at 4. Expensive. Because there's a high probability it gets there. So they keep it pricey. That's why Amazon calls are pricey. Because the friggin' thing is at 1,001. Where was it? It was $930 after the mini crash that we alerted the buys. And I'll be the first one to say that over the last leg of the move, since last Thursday, I'm not in Amazon. It's gone up another 25 points. We played the bounce from the 930 to 970 level, and now it's up to 1,001. I didn't get and again, I'm straightforward. We had so many winners all over the place. I didn't get a chance to do the Amazon. I should have, and I might get into it again because it doesn't matter. It's 1,001. It's probably going to go to 1,050. What was the high on Amazon? The high on Amazon was 1,083. So can Amazon go to 1,040? That means 40 points from here. Maybe I'll cash those other 40 points if my charts permit. And I'll post Amazon tomorrow. So guys, it's wake up time. Just stop making excuses. And I'm just showing you some very, very simple charts. Okay. Here's your chart I can put SPX in here. And put the daily. These are all constructed by me. Hello. Not like bought from some service or some guy doing it for me. It's my brain, boy. Okay? So where are we? Is it that hard to see? All channels. Mathematical channels. Drawn to perfection. Not because I'm creating the perfection, but the candles are. And when you look at this picture, does it really look like we're going into a bear market? I mean, forget about the indicators and stuff, the McClellan oscillator and the full stochastics and stuff like that. Just look at this. This was your highs, and we broke out, and they're two small candles. Does this look like it's going to go? This is the channel. Upper end of the channel is 2,600. Am I that idiot to say, oh, we're going to 2,600 right away? No. 2,600 means that we are up another 700 points from here on the Dow Jones. No, I don't think that's going to happen. I think it's going to happen by the end of the year. Because President Trump and his team and his one of the finest economic teams, they're smart cookies, guys. They're working with the Democrats to get some stuff done, just the way government should be. They cut deals right, left, and center. And we will get some solid economic reforms that are long overdue. That's when we get to 2,600. But forget that for a minute. So now we broke out, and guess what? This second channel 1, 2, 3, 25.50. So let's say, for example, you do not want to do any trading whatsoever. Just buy the frigging, which I've mentioned quite a few times, the October 20th, 25.50 calls, which cost $4, by the way. I recommended them at 2 and change. They're $4 right now as of tonight's close, and still being accumulated. And just leave it in there. Seriously, talk about a swing trade. You got a whole month and a half. I mean, you got a month there. You're going to go through enough whipsaws. You can always dollar cost average a bit. And if the charts truly change, What do you think? I move away? I'm always there. So bottom line is, yes, Scotty bought at $1.50. Great. They actually went as low as $1.20. Oh, you bought at $1.90. Yeah, okay. That's great. So you're more than a double on that. And keep on buying those. Scotty, you're talking about the 2550s, right? Just type in me a yes or no. Good. Excellent. Proud of you. It's like self-managed. So even if that goes from 4 down to 2 or back to his cost at 90, $1.90, you think he's just going to freak out? No, he's going to buy a little bit more as long as my charts are showing that the trend is still up. And he'll probably sell them at $12 because 50 points in the S&P, hello, that's a lot. Beyond $12, you probably sell them at $20. And your cost basis, but accumulate along the way. That's all I'm saying. Don't just sit with your initial buy at $1.90. So this is great. There's nothing here. This is daily chart. There's nothing here that shows. Look at this, surging. That's not your eyes in your brain telling you what to do. That's real money. That's the power of the market, the full stochastics, power, momentum indicator. Telling you, surging. You don't make these things up. You can make all kinds of stories up in your brain, but you can't make these things up. This is a fantastic chart. Just fantastic. What's this one? I have tons of charts, so I'm not going to obviously spend my whole night here sitting and telling you guys what on this thing. But this is a great trading chart, a perfect one, right? When the markets crashed, I drew a Fibonacci retracement. Don't ask me to explain the Fibonacci retracements, okay? Want to learn all this stuff? Sign up for the advanced coaching sessions. I'll teach you from from dumb 101 to making you smart 203. How about that? Okay, and the rest of the smartness to the third level will come from you guys. Come from practice and moving on. So the Fibonacci retracement simply means, in simple terms, where the market is going to bounce to after some big fat crashes. Well, guess what? We went above the full retracement, 100. We played this move. We played this move to the 50. Anytime the market crashes like this, most 99% retail traders, that's it. The media like, oh my God, it's over. This bear market starting. The idiots are like, oh yes, and you can't. This market is just too dangerous. This and that. Oh, okay. As if the market's never been dangerous. The market's actually more dangerous when it's going higher because most traders, again, majority traders are so scared of heights, meaning as the markets go higher, they just won't buy. They won't buy down here. They won't buy up here. What the heck will they buy? So they sit on the side and make all kinds of nice, beautiful excuses. Write some poems next time you want to make an excuse. How about that? All right. So this, anytime you get a big impulse move like that, an impulse wave down, big fat impulse, is a big time selling, billions of dollars, stops triggered, all kinds of stuff. It's not the end of the world. You have to monitor it. Could have gone lower. But we got this massive, beautiful, look at this highlighted Chinese firecracker. That's what it reminds me of, right? Boom. Big fat hammer reversal on volume at 9 a.m. on Monday, on the 21st of October. Look at the thing. 21st of August, 9 a.m. pre-market, bang, reversal candle, buy. And generally speaking, you get a 50% retracement of this big decline. And guess what 50% is? Right there. I pointed out to people right, left, and center. So you went from 24.15 pre-market to where the market started, which was around 24.20, which I showed on the other chart, on the E-minis, and you got yourself 50 points. How long did it take? 1 day. The perfect moments come and go, but the human trader never takes advantage of it. These, gentlemen, are the perfect moments. These. Well, that's more, that was pre-Irma, so that was still a kind of tricky one. I can understand if somebody didn't take any positions before that, but still, This is not the perfect moment. This is just a continuation pattern, meaning we go up a little bit more and then we're going to drop a bit. These are the perfect moments. So the next time this happens, which it will, it'll be another perfect moment. And hopefully I don't see silence and fear and adult diapers being shipped from Amazon to your house. I want to see some risk traders, quantifiable risk, walking in there, which we have a lot of members like that. A lot of them are silent. They send me texts on the side, and sometimes I put their messages up. So you guys can see what the heck they're doing and why they're doing so well, and many of you are not. Talk to them. They're using the same content I'm delivering. Why are they doing better? Don't give me that hog wild excuse. Oh, they're richer than me. They have more money. No, not true. There's a lot of smaller traders who are just kicking butt. Because if I'm showing 100, 200, 400% type of ROIs, which I'm showing pretty consistently, then those few losses that you take with the remainder of the money, you can make up that money and 3 times more. So where's the excuse? Logic. Remember, common sense is the most uncommon trait in retail traders. They just don't have common sense. We're being dead serious. So anyway, the next time this happens, don't just run out the window, jump off your first floor window and sprain your ankle, okay? You got to be a tactical buyer depending on what I'm putting out there and what I'm seeing down here and all that kind of stuff. So this your 1 hour chart is a pretty terrific. This was your bear flag that broke down. We played that and this. This is an impulse wave. Hopefully it gets up here. If I start to see it break down below the 20, I will just review my Twitter feed, okay? I don't want to go into the whole thing right now. Anyway, any quick questions? I'll be more than happy to answer it, and I don't want to linger on because I gotta get up early, and we got a long day tomorrow. Any quick questions, please? Will, do you have any questions? Okay, Scotty, love you, man. You got to still, fix that time with me when we do the one-on-one sessions. Make some time for your own good. All right, guys. Everyone can hear me. I'm going to sign off. I think we've covered quite a bit of basics out there. Market still looks pretty damn good. Futures are down about $1.50 right now. Selected stocks, fantastic. Even in a bad market, there's always going to be some select stocks that I'm showing that are going to basically whiz bang all the way higher, right? So you always have to shift some money into that. Focus on cheaper lottos, which I've been showing, which are doing tremendously well. Stay away from really expensive options at this point because the markets are volatile, so those can shrink in value pretty fast. Cheaper ones can too, but it's lesser loss, for a better choice of words. Don't go hog wild on one position. Don't get too excited about anything. Just be tactical, less emotional. Start with that. Less emotional. And I really wish you guys well. I'm always there to help. And Will, hopefully you'll sign up, see the real facts of what we do here. We're real traders here, not some fake traders. All right? On that note, have a great evening. God bless you all.